Have you been on the fence about buying a home? Perhaps you're waiting for those home prices to drop drastically before you make a move. You keep hearing words like market crash and recession. And what's up with those interest rates? In today's video, I'm going to talk about the 4 biggest questions I'm getting right now about the real estate market and my take on what to expect. Let's get right to it. Hi everyone, Andrea Delancy here. I'm a realtor in Northeast Florida and I post weekly videos about our local market area, from my favorite things to do, neighborhood tours, and all things real estate. Do me a favor, if you get any value from my videos, I'd love to get a like and subscribe. It helps get my videos out to more people like you. And you can always visit my website for more information. So we've experienced some crazy market conditions over the last couple of years. And in recent weeks, we've started to see some shifts that have left a lot of people feeling uncertain about the market, and in some cases, downright fearful. But the truth is, the real estate market is constantly shifting and changing. Some changes are bigger or more impactful than others, but through pandemics, elections, and even recessions, we can never really predict what's going to happen. No one has a crystal ball. But what we can do is talk about how those changes will affect you and if it makes sense for you to buy or sell. No matter what's going on in the world, one thing will forever remain the same. People will always need a place to call home. Before you panic, let's cut through some of the noise and talk about some of the biggest concerns and questions I'm being asked right now and how we can address them. Number 1, what's happening with mortgage rates? Rising interest rates are one of the biggest factors affecting the housing market right now. Unfortunately, some buyers have been pushed out of the market for the time being due to higher interest rates. As rates go up, your buying power goes down. But the reality is, we've been spoiled over the last 5 to 7 years with these 3 and 4% interest rates. It's just not normal. Historically, 30-year fixed rates have averaged just under 8%. So today's rates at 5.5% or even 6% are still a good deal comparatively. When I bought my first home in 1997, my rate was almost 10%. A higher rate doesn't necessarily mean buying a home is no longer a good investment. You may just have to adjust your expectations to better fit your budget. It's also important to remember there's no better hedge against inflation than homeownership. Historically, we've seen homeownership outperform inflation in most decades. So if there's an asset to invest in, housing is one of the few tangible assets that tends to hold its value. And that leads us to the next question. Number 2, what happens to real estate if we go into a recession? A lot of people are still reeling over what happened in 2008, and nothing strikes fear into buyers and sellers like the word recession. It's true, the real estate market did crash in 2008, and it was due to several factors, including unregulated and predatory lending practices. This time, market conditions and the mortgage approval process are very different. There's no bubble that's going to burst. And once again, historical context is very important. In 4 out of the last 6 recessions, home prices have continued to appreciate. So if a recession does happen, it does not necessarily mean home values will decline. In fact, interest rates usually go up at the beginning of an economic decline, but in order to stimulate the economy, they will eventually come back down. According to research presented by Fortune, over the past 5 recessions, mortgage rates have fallen an average of 1.8 percentage points from the peak. What that means is, even if you end up having to buy at a higher rate than you'd like to for now just to get into a home, it's likely you'll have the opportunity to refinance at a lower rate in the future. And at the same time, you'll be building equity in your home. Number 3, What's going to happen this year in real estate? We are definitely now in a cooling off period. The inventory of homes here in Northeast Florida has nearly doubled in the last few months. And as the inventory of homes continues to go up, it'll get easier for buyers to find opportunities to negotiate. And sellers, you can no longer expect to get thousands of dollars over asking price. You'll need to price your home properly, and you may have to make some reasonable concessions. But that's nothing to panic about. The housing market is still very strong, and home values are still expected to continue going up in the future. It just won't be at the same pace. Instead of seeing 20% increases in value in a 12-month period, we'll get back to a more normal pace of 5 to 6% per year. Like I said, none of us has a crystal ball, and the real estate market is constantly shifting. During my 18 years in the industry, I've seen quite a few ups and downs. And while we're constantly being bombarded with different opinions and information, it's easy to get lost in the noise. Whether you're thinking about buying or selling, my advice is to look at the facts, look at the numbers for your local market, and even as specific as your neighborhood. And work with a realtor and lender who will help you honestly evaluate your specific situation. Number 4, should I buy a home right now? This is probably the question I'm getting asked the most these days. And the short answer is yes, especially if you're currently renting. Rental prices are going to continue going up, and the interest rate on rent is 100%. If you're in the financial position to buy a home right now, then by all means, you should absolutely invest in buying a home where you will have an appreciating asset. Even if you have to lower your expectations a bit, it's better to get into a home now so you can start building equity. Everyone has to start somewhere, and you can always use that equity toward an upgrade in 3 to 5 years. If you already own a home, that's a little different. You can certainly stay where you are and continue gaining equity. But maybe you're in that place now where you're ready to upgrade. Maybe you need more space, or you want to improve your lifestyle. Whatever the reason, if you've owned your home for 3 to 5 years, you likely have quite a bit of equity to work with. How can you use that to get to the next level? Now that things are cooling off, it could be the ideal time to take advantage of that equity and upgrade. The rise in inventory will give you more choices, and you'll have more opportunities to make offers contingent on selling your current home. The bottom line is we can't control what's going to happen with mortgage rates or price appreciation. But historically, real estate has always been one of the best long-term investments out there. The key to navigating any market is staying informed and educated, looking at all the facts, not just headlines, and working with professionals who can help you decide what makes the most sense for you. That's it for today, guys. If I can help guide you through the buying or selling process, feel free to reach out to me anytime. You can find all my contact information on my website, and it's always in the description. Thanks for watching. See you next time.